The biggest issue retail traders as well as professional traders have in the stock market is the volatility and not knowing when a trend is changing from bullish to bearish or bearish to bullish. They become reactive traders, and reactive traders are based off of emotions. And when you make an emotional trade, you are going to be wrong 99% of the time. It's just something that it happens all the time, that the minute that you think you have to get out of the market because it's not going to go up, it reverses up, and then you wait for it to dip down to buy it, and it doesn't stop, and the minute you buy it, it drops back down. These are cycles that repeat over and over, and it is something that can be tracked, and from that you can forecast and even predict exact dates as far as when the market is going to reverse. My name is Gary Dean, and I am the co-publisher of Sentiment Timing with Woody Dorsey. Now, I've been following Woody Dorsey since 2004 when I was a financial advisor, and I was able to read his institutional research letter, and I was absolutely amazed at how this guy was predicting market turns months in advance, and then watching how the market was pretty much mimicking what sentiment was doing on an inverse basis. So when everybody was bullish on the market, it was heading up, you really wanted to be looking for the move to the downside, and it really was like clockwork, and it was absolutely amazing. So I decided to see if he wanted to move into a more retail end of things, and he agreed, and that's how we came up with Sentiment Timing. So really the whole basis of sentiment and tracking it is the herd or the majority is going to be wrong most of the time, and they're going to get bullish at the wrong time, and they're going to get bearish at the wrong time because they're emotional traders. And if you really want to start, making money in the market, you have to start thinking like computers or institutions they're emotionless, because the thing is that they're anticipating when these big moves are coming. So when the market is heading up, what they're doing is they're actually unloading their long positions and building a short position. Then when it drops, they're reversing it back and forth. So they're anticipating the next move, and the way that they do this is a majority of them follow what Woody Dorsey does on his institutional newsletter. He's followed by some of the largest financial institutions in the world. He's been featured on CNBC, Fox, just about every major financial network. And he's been doing this for over 35 years. He's considered by many as the best market timer in the world. And as far as sentiment goes, he's one of the pioneers that started charting it and really has a good understanding of the psychology of the market. And that really is what moves prices up and down is the psychology. If people believe that this market is going to keep going up, they're going to be bullish on the market. And unfortunately, they don't know when there's too many on the bullish side, and then things collapse, and they don't realize that the trend has changed until here when they start capitulating, and then they sell their long positions only to see things recycle and it go back up again. And they repeat over and over again, and it's like a trend analysis, because there's only a time period that these traders can be bullish or bearish, and it's going to switch, and that's what Woody does. He measures these trend duration analysis as well as sentiment to predict exactly when the next market reversal is going to be taking place. So our sentiment timing model for success, there's really three primary elements. Timing, and those are the technical timing indicators. So how long is it going to take for those cycles to recycle and cycle again? And Woody predicts exact dates as far as when when the market is going to reverse. So from that, we then match it up with sentiment. And let me show you what a sentiment chart looks like that we have here. This is one of our sentiment charts. So we match it up. So if we have a turn date that's on the down, that's going to be looking up, and it's coming in the February time frame, notice how everybody is bearish on the market. Remember what I said. They're emotional traders. They are going to make the wrong decisions at the wrong time. And usually everybody's bearish when the markets reverse. And then what happens is everybody turns bullish. Look when they turn bullish after we are already above these highs here. So everybody's turning bullish. And as the market is now really having a hard time going up, this is when you want to get bullish. When it's coming down here, this is where the majority of your gains are going to be made. It's usually within the first week of the reversal. So knowing when to anticipate these reversals and then being able to track up on how sentiment is or how the herd is feeling about the current trend allows you to really position your portfolio with a real large confidence that the market is going to do exactly what you think it's going to do, because you have the best market time in the world that's calling for a reversal to the upside. You have sentiment telling you that everybody's bearish on the market. And from that, you just look for a technical aspect, and that is where the markets could reverse. So that's the last aspect of the way we really work things with sentiment timing. So the timing, like the technical indicators, they tell us when. Sentiment is why. So if we're looking for a top and it to roll over, why? Because everybody's bullish on the market. They don't expect it's going to go down. So then we move to a technical aspect, and that is, do we see bearish divergences if it's going down, if we're expecting it to go down, or bullish divergences if we're expecting it to go up? And then we just use regular support and resistance levels as far as where pivots as the reversal could take place. And from there, you simply adjust your portfolio. If it's up and we're looking down, short. If you're just a buy side, then you just close your positions or put a stop, wait for the low to come in and buy again. If you're trading both ways, up and down like I do, you're going to be shorting at the top and buying at the bottom. And like I said, even if the turn date or the technical timing date isn't exact, it doesn't mean that if we're looking for the markets to go up and you get it misses the actual turn date, you still know the majority is everyone is bearish on this market. So it's not going to be wrong for that long, and eventually we're going to get that move to the upside. And it's been repeating over and over and over again, really since the start of trading. So let me give you an example of how this all works. This is our April 14th newsletter. This is when Woody was saying that there's a sell point due near 422. So this is the when. We knew, because the market was heading up then, that this was when the market was supposed to reverse to the downside. So now let's take a look at sentiment. And remember, we had all these bullish sentiment readings here, but the market kept going up. Why? Because the turn date wasn't until here, and we got the 91% sentiment here. And if I take a look at just the regular charts here, we had bearish divergences as the S&P was running right into resistance, as it was right on the turn date, as well as with high sentiment readings. And from that, we saw a 100% drop, 100 point drop in the S&P, and it's rallied back. But the thing is, this was the setup, was this move here. Now, we're not looking for just 10, 15 points. The position trades that we make are usually generating anywhere from 90 to 200 to 300 points. And so we're not day trading this. This is the type of newsletter that you're going to be able to read and know exactly what's going to be playing out almost months in advance, because you're going to be able to see what Woody is thinking, what sentiment is, and you're going to learn on your own. Okay, well, sentiment is pretty bearish right now. I don't want to be getting too bearish on these markets right now, and all you have to do is wait for the turn date and start positioning yourself on the long side. So that is really the whole aspect of our newsletter. And one of the biggest things that I think we're proud of is, since September 14th, September 2014, till this most recent move here, Woody Dorsey has predicted exact turn dates for over 1,400 S&P points. So these dates are given out weeks in advance, and on these dates on here, you can see these are exact turn dates on it. Over 1,400 points. Now, to put that into perspective, the S&P has traveled 1,500 points since the 2009 lows. Woody predicted 1,400 points on just from September 2014. So the question is, if you're ready to start making better trades with more confidence, removing your emotions, knowing when, why, and where the markets are going to reverse, then you really need to consider taking a peek at our newsletter, because Woody is considered one of the best market timers in the world, and on top of that, you get to see how other traders are feeling, and the reason why that is so important is the majority is going to be wrong at the wrong time. They're going to be bullish at the tops and bearish at the bottoms. So when you're able to see this through Woody's sentiment data, you get a pretty good idea as far as what's going to go on, and things really don't drag out that much longer when we start seeing these extremes. So some of the largest financial institutions in the world rely on Woody for his forecasting, and the question is, shouldn't you? So we're having a special. If you subscribe now, it's for the first 2 months, it's only $99.99. Then it moves to $149.99. You're going to use the coupon that was provided in the email. And really, the biggest risk right now is not knowing when these markets are going to reverse, because we do. And if you want to, I would subscribe now and take advantage of that $99.99, because once the first 30 subscribers are in, that will be removed. So with that, good luck trading.